Thanks for being with us. Today, I'd like to talk to you about the magic of price action. There are many ways to trade. Obviously, many indicators out there you can use, many moving averages, etc. I did want to share with you the basics of price action. This is trading without any indicators at all. Now, I myself do trade with indicators, and we'll talk a bit more about that as we get into the presentation. But I wanted to give you the basics because if you're able to read a chart bar by bar or candle by candle without any other indicators, it really tells a full story. And at any moment in time, you'll be able to tell whether or not the buyers are in control, whether the sellers are in control, or better yet, whether neither is in control. And that's a very important thing to be able to identify. So again, welcome and thanks for joining us today. This is our Magic of Price Action presentation. As Renee said, I am Vince Vora. I'm the head trader here at Trading Wins, and I've been doing this for a little over 30 years now. Throughout that time, I've developed several strategies and trading systems, but today I do want to focus strictly on price action. Please do remember that trading can be risky, so please don't trade with real money until you are completely comfortable with the system you are using. Now, in today's presentation, of course, we'll start with just a couple of slides to explain what price action is and how we're going to use it, and then we're going to go to the charts. And I'll show you some examples, some recent examples, and talk also about pivot points or the reversals and continuation phases throughout the life of a market, be it stocks, Forex, futures. It really doesn't matter. What I'm teaching you today relates to all of those things, okay? And also the importance of identifying and trading with support and resistance. It's much easier than you might think. I will show you several examples and show you how useful this is. And then, of course, as I mentioned earlier, near the end of the presentation, we'll talk about a couple of different tools and maybe some indicators that you can introduce into your trading. Along the way, feel free to enter any questions you may have. I'll be happy, time permitting, to answer as many of them as I can for you, okay? So what is price action? Well, obviously it's the movement of a securities price. Again, it doesn't matter whether this is a futures contract, a Forex pair, or a stock. But what price action actually is it's the back and forth in a stock. It's what we use to make sense of the random movement on any chart. And the swing high and the swing low at any point in time is extremely important, and that's what we're going to use for identifying areas of support and resistance. I will go through many examples as we go through this on a chart. But before I do that, I wanted to go through a few slides and just give you the basics of the candlesticks. Now, I use Japanese candlesticks. You can use open, high, low, close bars. You can use any type of bars you want. I'll briefly use candlesticks as an example to help you read what is actually happening on a chart and be able to interpret at any moment in time, like I said before, who's in charge at any point in time. Is it the buyers? Is it the sellers? Or are we in a phase of consolidation? That's basically what we're looking for. So when you're looking at a chart, you're going to see green candles and red candles, or if you don't put any colors on them, they'll be white and black. The white candle here is the same as a green candle. Basically, what it means is the close was higher than the open that day, and that's why the body is either clear or it's colored green, for example. So the way to read a bar is there are 4 parts. There's an open and a close, and there's the high and the low. So again, if you're using open, high, low, close bars, those are the 4 key pieces of information that you need to understand at any given point what happened throughout that candle. So in this example, the opening price will always be at the bottom edge of the price of the body here. So the candle's made up of the body, the difference between the open and the close. And then we have what we call wicks or tails, which are these lines that identify the high and the low point. Now, if the candle is clear or green, the opening price was at the bottom edge of the body, the candle's body, and the close is the upper edge of the body of this square. Okay, and we know that because of the color. If it closes higher than the open, it will be clear or green. Flip side is if it's a red or black candle, that means that the open was at the upper edge of the body and the close was the lower edge. In other words, we closed lower than where we opened. And whether this is a 1 minute bar, a 5 minute, a daily, weekly, monthly, it doesn't matter. You read it the exact same way. Okay, so taking this upper candle, we opened at this level. At some point throughout the session, we went as low as this point, as high as this point, and then we settled here at the top edge of the body, the close. Okay, so what I want you to do is think of each candle as an individual tug of war between buyers and sellers. So if we opened here, sellers at some point were able to push the price down as low as this point here, as this tail. Buyers stepped back in and pushed it up as high as the high here, and then sellers came in and pushed it slightly lower, but we managed to close higher than where we opened. So we could say that buyers were the winners here on this particular tug of war. The flip side is true of this candle. We opened here, buyers were able to push it up as high as here, but then sellers stepped in, pushed it all the way down here. Buyers tried to recover. They were able only to recover a portion of it, and we ended up closing below where we opened, which means the sellers won that particular tug of war. Now, when we get to the chart, there's one more piece of this, and that is where the close, today's close is compared to yesterday's close, okay? But let's not jump ahead. Let's carry on. Now, you're going to see different types of candles. I don't want you to get focused on the names of a particular candle, but what you're going to need to assess for you to determine things like buying pressure or selling pressure, or the strength behind a move, is to look at the size of the candles. So there will be small candles and there will be larger candles. There'll be candles with wicks and tails and there'll be candles without, okay? They all tell a story. So if we look here at the far left, this smaller clear candle, we read it the exact same way. We always read it the same way. In other words, we opened at the bottom edge of that body. We went as low as this little tail, as high as this wick, and we settled at the top edge of the body. So again, we can say that buyers won that tug of war. But the other thing we can say is it wasn't much of a tug of war, was it? Very small range from high to low. So there really wasn't a lot of movement that day, okay? Then we look one step to the right here, this larger clear candle. Again, we read it the same way. We opened at the bottom edge of the candle. We went as low as this wick here, as high as this point, and we settled up here. Now we settled much higher than the open. So obviously there was a much wider range from low to high. This was a much bigger tug of war. And the other thing we can say is buyers clearly won this battle. They were able to push prices much higher than where we opened, okay? So this is a much more significant win for the buyers than a small candle, okay? Now, the two dark candles here on the right are telling us the same thing, except in the opposite direction. In other words, here we open at the top of the candle, went as high as here, as low as here, and settled here. So we settled lower than where we opened. That means the sellers won that battle, but it wasn't much of a battle. Very small range from high to low, as opposed to the much larger candle where there was a much bigger battle. Sellers were able to push price significantly lower than where it opened, and that means it was a much more decisive win for the sellers. A lot of selling pressure going on. Now, an even more significant type of candle is the one that doesn't even have wicks, okay? In other words, it's all made up of bodies. It opened here. Buyers in this case were able to push it up the whole time right into the close of that candle. And again, whether this was a 1 minute, a 5 minute, daily, weekly, monthly, it doesn't matter. You read it the same way. We started off that time period here, and throughout that span, it was all buyers here. The dark candle on the right, it was all selling, right? Sellers outmatched buyers the whole time and were able to drive price significantly lower. So when you see a candle like this, this carries more significance than the candles that have a wick or a tail. Also, the size matters, right? The larger the candle, in other words, the wider the range from low to high, or open and close in this case, the wider the range, the more significant that candle is, okay? And then we come to what we would call indecision type candles, okay? Think of it, it's the same theory, same idea, tug of war between buyers and sellers. We open here, we have a big tug of war, a much wider range. You know, things are going back and forth, and then we settle slightly higher than where we open. So we can give the upper hand to the buyers, but not by much. But there was almost as much buying, almost as much selling as buying, right? It was a huge tug of war. So this tells us that it was a real struggle, and the buyers just squeaked it out. Here it was the sellers that squeaked it out, okay? On the flip side, if you get small candles like this that really either have no body at all or have a very small body, it's telling us the same thing, that it's very much an indecision type candle. In other words, there was no clear winner. This was like what we would call a tie. It's pretty much equal buying to selling, okay? And these types of candles appear either at the top of an uptrend, most often that is, or at the bottom of a downtrend. So think of it this way. If you have a series of candles like this, where buyers are just pushing price higher, 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 and then suddenly you get a candle like this little guy here with no body, what is that telling you? Well, before, buyers were out buying sellers big time, right? Pushing the price higher, higher, higher. Now suddenly we had an equal number of sellers to buyers. So that gives you a heads up to a potential turning point in that stock or that Forex pair, that futures contract, okay? Works the same way if we were selling off, sellers were winning big time, and then suddenly we had a tie, right? Now buyers have matched. So maybe we got low enough where buyers are saying, hey, at this price, I'll take it, and they're stepping in, and that could be a turning point, okay? So let's get to the chart here and start looking at this. Now, before I go much further, one tip that I always like to give everyone is to trade a nice, clean, trending chart. You don't need indicators to help you read what we would call a clean, sort of predictable chart that makes trading very easy. If you look at ABMD here, you know, from last September until now, we had a real strong uptrend, right? It was pretty clear the direction we were heading. Recently, we started to roll over, and we know that. Why? Because we've put in lower lows and lower highs now. But either way, it's very predictable, very orderly behavior here for this stock, as opposed to, say, something like Tesla. If you look at Tesla here, oops, let's try that symbol again. Tesla here, it's all over the place. I mean, there's really no clear direction here. So which one is easier to trade? Obviously, the other one is very predictable. You know, the odds are in our favor that things will continue to go in the direction they're currently trending, as opposed to this, which is just a chop fest back and forth. So no matter where we enter here, chances are great that we're going to get stopped out, right? And that's what makes it so difficult. So you always want something clean like this. Now, let's talk about reading what's happening on the chart candle by candle. If we look at the Dow Jones here, Dow Jones Industrial Average, we go back to, say, last October, okay? And, you know, one simple thing to do, I'm going to zoom in here. So hopefully you can all see that, even if you're working on a smaller screen. You know, one simple method to use to get into a stock, and I mean, we can use many strategies. You know, we have several at Trading Wins, but one of the easiest things to do is to take a break to new all-time high. So back in here, late last September, early October, we broke above this high pivot, and that was an all-time high at that point, okay? So a sort of a no-brainer way to enter. But if we start reading this candle by candle, it really tells us everything we need to know. So if we look at this first green candle here, what is it telling us? It doesn't even have wicks, right? It's telling us we opened, and throughout that whole session, and this is a daily chart, by the way, so each candle is a day, but again, it doesn't matter. Throughout the whole day, buyers were just pushing prices higher, 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 higher. So we look at that individual candle and we can say buyers clearly won that tug of war, okay? Now, how does this close compare to the previous close? Well, it's much higher. Even the open was higher than that. So clearly buyers won that battle. Now we go to the next candle. Again, we open even higher than yesterday's close, and we close again at new highs, which again, buyers fully in control, right, on that candle. We go to the next one, and yeah, they didn't advance much, but they certainly didn't trade below our previous low. So there are always two questions that you need to ask yourself as a trader. You need to ask who's winning the individual battles and who's in control overall, okay? A nice clean trending chart like this makes it pretty obvious looking back who's in control here. Even before we broke out here, it seemed like buyers were in control, right? They were driving the price higher, higher, higher. Then they took a bit of a break. Sellers weren't able to push this very low, were they? And then we broke out to a new high, and we start making higher highs again, okay? So clearly, in this case, buyers are winning the individual battles and they're in control overall. Now, we come to this little red candle here, and what is that? That's a classic indecision type candle, right? Suddenly, the very low range from high to low, okay? We closed actually lower than the previous close, didn't we? We closed slightly lower, but we didn't breach the low. So we can say sellers won this individual battle because we closed lower than the previous low, but they weren't really able to gain any traction or really drive the price down, were they? So it's just a heads up at that point. The next candle, sort of the same. We can say, you know, more or less sellers beat it out. But if we get closer here, actually, no, the close on this candle was higher than the previous close. So although it's red, we can say buyers squeaked out a small win, right? And then, of course, from there, buyers take over and they go higher, 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 higher. So when you're reading this, A, you want to know who's winning the individual battle. B, you want to know who's in control overall. And the only thing you need to worry about, the only time you need to worry, is if you get a close below a previous low, okay? Unless and until you get a close below a previous low. See this one here? We closed lower than the low, not just lower than the close, but lower than the low. That's a heads up, okay? So at that point, you would mark that low, and if you got a trade below there, you would be out of that trade, okay? So that's essentially where your stop goes. In this case, it never did breach that low. Buyer stepped back in, and we continued taking this higher, right? Until we get another candle that closes below that previous low, okay? Don't get fooled by the color all the time, always compare one close to the previous close. In this case, it was much lower than the previous close, so sellers actually won that battle, and we closed below a previous low. So again, you would mark this low now here and wait to see if you get taken out. Eventually we get taken out. But it's so easy when you do it that way to read what's happening, understand what's happening, and not panic out of a trade, okay? You always know exactly who's in control. And if it's an area that's going sideways, just going back and forth, it's just a big battle between buyers and sellers, that's an area of consolidation. That means nobody is in control. You do not want to trade during an area like that, okay? You only want to trade when either the buyers are in control or the sellers are in control, okay? So let me know if you have any questions on that. It's very straightforward. And remember one thing, that as traders, the traders that ask why are the ones that lose money. The traders that ask what is happening, those are the ones that, as long as they can answer that question, make money, okay? So in other words, here, there's always some random movements, right? The Dow was going up throughout this period. Then it dropped sharply. Then it went up. Then it dropped sharply. If we try to answer why all the time, okay, there are so many reasons why a market can move one way or the other that it's impossible for you to nail down that answer. And if you're going to spin your wheels trying to figure that out and anticipate what's coming next, you're going to get into a lot of trouble, okay? So, you don't need the news or anything else, because news stories a lot of times will give you a big push one way and then it will just settle right back down once that story dies. See, as long as you can read the bars, you don't need it. It doesn't really matter. The bars tell you what's happening. It doesn't matter what the news story is or why buyers are buying. As long as you know that buyers are buying, you know which way to trade. If sellers are pushing the price down, you know which way to trade. So it doesn't really matter what the story is behind it. Sure, you want to pay attention to the main issues, out there. That it always helps. But especially on the lower time frames, if you're trading 1 minute to the next, who cares what the news is? All you care about is, are buyers in control or are sellers in control? Okay. Now, how can you tell the difference between a temporary retracement in a trend compared to a complete change in direction? Okay, that's pretty simple, and that's where the higher highs and higher lows switching to lower highs and lower lows comes in. If you look at something like in here, okay, we are pushing price up, it pulls back a little, and then it continues. When it pushed back, it didn't take out a major low in any way, okay? It just was a temporary pullback, and then it took out the high again. So when you have higher lows and higher highs, you're in an uptrend. The only time that trend is over is when you switch, and you can see here, we put in this low. When we bounced, we couldn't get back above that high, which created a lower high. And then as soon as this low was taken out, now we knew we had a lower low as well. That was the switch. We knew this uptrend was over at this point. We didn't have to wait for the big flush to recognize it. This was it, okay? And that's the difference between a minor pullback and that rollover. Now, a number of other things I want to share with you. Support and resistance. Pivot highs and lows. So the market will pretty much always zigzag, okay? Not this perfectly all the time, but this is more or less what price will do. These points, the lower points, are what we call the low pivots or the pivot lows, and the high points are the pivot highs, okay? And one easy trick to deal with this, if you're having trouble identifying highs and lows here, the pivot highs and lows, switch to a line chart, okay? If you switch to a line chart, you have the points back and forth. You can easily identify those, okay? Now those are based on the close here on the line chart, but it's very, very helpful, okay? So these are your pivot lows, these are your pivot highs. It works the exact same way going in the opposite direction, okay? Stock will zigzag, okay? Pivot highs are the highs, pivot lows are the lows. Why are they important? They help us identify support and resistance. Have a look at this. I want to go through a little exercise for you, with you here. We're going to look at MAR on a weekly. It's a perfect example. Now you see this area back in here. Let's assume we were at this stage. We were here, and nothing to the right of that existed before that, okay? I'm going to zoom in here. Let's see, and get to that point. I believe it was there. Let's just do this. Okay, there. So all we had was one major high and one major low, okay? That's all we had at this point. All we have to do is take our price level tool, a horizontal line, and slap a line at those levels, okay? That's it. And now, when we start rolling back, let me zoom out and show you that at that point, we had no idea what was going to happen in the future, did we? This is where we were. These were all the candles we had on our chart. What we did know is we had a high and we had a low. Every high and low at some point in the future will act as support or resistance, okay? If you look here, we bounced around, we came back to that high level, and we bounced off it. We came back it again, we hit it, and we bounced. Then we finally broke through. We retested it again from the other side, because when price is pulling into it, that's support. When it goes below and tries to get back above, that same level becomes resistance, okay? And you can see how well these levels hold, how many times price hits and bounces off it, okay? And so all you want to do is keep drawing lines at the highs and the lows. At some point, see this one right now, it's out in the middle of nowhere. At some point, it will act as support and resistance, okay? And you can draw lines in any direction. There is no wrong way to draw a line using the highs and lows. The only thing you want to do is, if you're connecting them, connect lows to lows and highs to highs, okay? So for example, if I was connecting this low here and this low here and stretched out the line up above, have a look at that. Price gets through it, comes back, hits it like a wall, and bounces off it. Let's say I want to connect these three little dots in here. Let's say we had nothing else in the future, but we had these three dots, and I stretch this out, right? Price hits it, bounces, hits it, and then finally breaks through, okay? It's incredible how well this works, and the main reason you need to know this is so if you're about to get into a trade, you want to know where the next level of overhead resistance is, right? You want to know how much room there is for the stock to run. You also want to know that if you get into it and it doesn't go your way, you want to know you have some sort of support behind your trade, right? Because if I was entering here and it goes against me, now there's that support level where it's likely to hit it and bounce back up again, and it prevents me from taking that loss, right? So very, very important, but very simple and easy to do. Just mark those pivot highs and pivot lows and go from there, okay? Now, tools and other indicators that you can introduce. The Fibonacci tools are fantastic. If we go back to that chart of ABMD here, and we go back and let's have a look at this trade in here. Let's say we're going to take a trade back in here. So when it pulled back here and hit this level of support, this previous low right in here, let me draw a line there, okay? So it had pulled back, moved ahead. So we had this low. We knew we had some support there, pulled back in again. We thought, hey, this might be a good place to enter. Well, what's another way to identify strong areas of support and resistance? First of all, the more times a level gets tested, the more, or the stronger or more significant that level is. But the Fibonacci tools, the retracement and extension tools are extremely helpful. All you need to do is find your previous low and high. If I take this low here and plot my retracement tool here, let me zoom in. You can see that it came back into this zone here. There are the percentages, the 38.2, 50, and 61.8. These are all levels of support, but the way I treat them is one zone of support, okay? So I like to color it in and show me that zone. So when price comes here and bounces, that's a great area to take a trade. And sometimes you will have a nice classic reversal pattern like we did here in the form of a bullish engulfing pattern, okay? Why? Again, we know how much room there is to run, and we know that if it goes against us, how much support we have behind this, okay? Now, that's one tool you can use to sort of increase your odds of success. Another way, let's say this was breaking out to new all-time highs. So none of this existed. We had no idea where future lows and highs would be. So we had no idea where future resistance will be. That's where the Fibonacci extension tool comes in. You use the same low and high, okay? Low, high, in this instance, go back to low. Now, here are your levels. First of all, the 100% mark, the 1272, the 1618, and the 2618. I like to use the 100% mark, the 127.2, and the 161.8 as my targets, okay? So if we were to get in here and it moves up to here, you take a third of your profits, move your stop just above break even. If it gets through there, it's most likely to go to the next level. 1272 gets hit, you take another third, you move up your stop again. 1618 gets hit, you take the rest of your position off and you move on. Very simple, very easy to trade. I can show you many of these. Let's look at a couple more quickly. Let's have a look at Amazon here. And if we look Amazon, we can look at here. Where's a recent trade example? I think right in here. This was a good one. If we look at this low to this high, you can see that price pulled right into that zone, that 38.2 to 61.8, right in there. It bounced off it and took off. And if we take our fib extension and we say, hey, did it hit its targets? Yes, it did. Let me zoom in here if I can so you can all see that a little clearer. There it is. So there's that first target, that 100%. Move your stop to above break even. The next target gets hit. You can see it bounce around and retested that level a few times and then eventually got to that 1618 and we're out with our final third. It works really well. You can use anything. You want to use Forex pair. There was a great example on the weekly USD CAD chart back in here. If we take our fib extension tool or a fib retracement tool here, you can see price move right into that level. Okay, let's just color it in for the visual effect. There's that support, comes into support and holds, right? Take our fib extension tool, because at that point above here we had no data, no idea how far it could go. There's our fib extension tool. There's the 1272 extension. There's the 1618. Nice and clear. Okay, very, very easy. Now you can use other indicators. For example, a 20 period moving average for slope is always good. One of my favorite indicators out there, actually. Let me just put it on here quickly to show you, for those of you who may not have seen me use this in the past. I like to use a 20 period simple moving average. Okay, we'll just thicken that up a little. And the only thing you want to check when you're about to take a trade is that you have a slope in the direction that you are trading. So if that 20 is sloping higher, that means you have momentum behind that move. Okay, so when you get a pullback like that and a bounce off it, that more often than not will lead to a successful trade. Okay, and the higher the slope on that 20, the more significant that momentum is in your favor. Okay, works the same to the downside. If you had a stock that's trending lower, I don't know, let's go to GE like this, and you get that pullback, look at the slope throughout this whole downtrend. Strong momentum to the downside. Every pullback here can be a trade opportunity. Okay, so you can certainly use indicators, but you always have to remember who's winning the individual battles and who's in control overall. And if you're in an area where it's hard to decipher who is in charge, then maybe no one is in charge. That's an area of consolidation, and the moving average will help you identify that as well. A flat moving average will tell you stay away from that area. Why blow your brains out in here and get stopped out time and time again when you can just stick to the areas that are trending strongly with momentum on your side here? You know clearly who's in charge. In this case, it was sellers, and you know clearly what direction you need to trade in. And then using those other tools will just help reinforce everything for you. Okay. Now, you know, how do you make trading with price action even stronger? Let me share with you a package we've put together. Now, I want everyone to take advantage of this because this is honestly, it is the basics of trading. If you don't have this down pat, you're going to have a difficult time being a successful trader. So, and I don't care whether this is your first week at this or whether you've been doing this for 20 or 30 years. Unless you can read a chart candle by candle or bar by bar, you're really never going to understand this enough to take those high probability setups. So if you go to tradingwins.com/action, that'll take you to this page. And in this package, you're going to get a pro training class, on-demand training that we call the magic of price action. Here, I'm going to go over all the concepts I did in this class and only in more detail. Plus, I'm going to show you 2 techniques to use with trend lines that will help you find some very powerful trades, okay? Also, those consolidation areas, right, that we call channels. How do you identify when they start, right? And more importantly, how do you identify that breakout and take advantage of it with price action? I'm going to go over that. Then my favorite part of this is a strategy that I started trading with well over 30 years ago. Back then, believe it or not, we did not have all the fancy tools and these sophisticated charting platforms that we have now. Okay. I actually used to draw my charts with a pencil and a ruler and my trend lines with a pencil and a ruler. I know it dates me. It's obviously a lot older than most of you, but it is an extremely effective technique, and it works just as well today as it did back then. And I'm going to share this with you. This in and of itself is worth way, way more than what we're asking for this package. I'm also going to share with you 3 money management techniques that will help you put the odds in your favor and manage your money correctly. Then, since I know most of you are going to trade with indicators, I thought we'd throw in our Magic of Ichimoku training course. Now, the Ichimoku Kinko Hyo indicator, otherwise known as the cloud indicator, is a very, very effective indicator that can be used as a strategy in itself. And we usually sell this as a separate course for $197. We're going to throw that in. We're also going to give you a 30-day membership to our Trading Wins Pro service. This includes nightly videos for me every Sunday to Thursday, recapping what happened in the markets and where I think things are going. And I also share trade ideas in those videos. And then with our pro members, we meet twice a week, every Monday evening and every Thursday morning for an hour. Members come into our room, ask me any trading related question you like. Those are all recorded, and you'll receive those recordings as well. And then once a month, we do what we call a course of the month for our pro members at no additional cost. So you'll get that along with the recording. And if you're just starting out and don't even have a chart package to work with, you can certainly try out Metastock Pro for 60 days. The folks at Metastock were happy to throw that in for us. So you get all of this for just $3. Obviously, this is not a moneymaker for us. We wanted to make it a no-brainer decision for all of you to show you what we do here at Trading Wins, but more importantly, to give you the basics you need to get on with your trading career. Without this, it's going to be very, very difficult for you. So again, whether you've been at this for a few days or many, many years, do yourself a favor and learn how to read the chart candle by candle, identify who's in control when. It'll help you immensely. Again, it's tradingwins.com/action. tradingwins.com/action. And all you have to do is click the green button and you're all set.